In today's video, traders, we're going to be talking about a short-term scalping strategy that really can work. It's one of my personal favorite ways to look at the market, and is actually something that can be applied to multiple time frames, but I find it really interesting on the short time frames. It has to do with structure, it has to do with momentum, and it has to do with trading in the direction of a strong push. Let's go ahead and jump into the video right now. So welcome back, traders, to the channel. My name is Nick. I make all sorts of currency related trading content here on YouTube for free. I do ask is that if this video is helpful to you, give it a thumbs up down below. I'll make more of this sort of content if this gets a positive sort of feedback from the community. So let's go ahead and jump into this concept. We're talking about a short-term scalping or short-term momentum trading style. And we're going to break down some of the logistics. How can you actually trade it? And what are some key things to remember or consider when you're trading short term? Now, you have to remember that one thing is for sure when you're trading on the short term charts. The big negative is that there are, the spread can be a little bit costly and there's a little bit of noise on the shorter time frames. For me, I'm not a huge scalping trader, but this strategy might be a pretty decent one if you are, and it might actually be applicable if you trade other time frames as well using the same general concept. So what we're looking to do before we get too deep into the technicals of the strategy, let's talk about a little bit of the why and how we're going to capture a little bit of this momentum that we're seeing in the market, right? The idea is that when a market is moving in a really strong move to the upside, for example, there are opportunities as a scalper or as a short-term trader to get involved with these in kind of the transition or in the movement itself, right? There are some ways to capture pieces of this momentum to the upside, because a lot of times when the market gets going, right, when there's some sort of big news release or there's some sort of fundamental reason, or even just the momentum is picking up, a lot of times that momentum can continue, and there's ways for us as short-term traders to jump in and ride that. So we're going to primarily be looking to use some sort of pullbacks with this sort of strategy. But there are some ways that we can technically look for these setups. And what we're going to be doing is we're going to have, you can see on the chart, I'm looking at a Euro USD chart on the 15-minute time frame. I did mention that this is a short-term trading strategy or concept for you to consider. So we're looking at euro dollar on the 15-minute chart, and we have these two moving averages. Now this is the 20 SMA, okay? And forgive my handwriting, the 20 SMA, and this is the 10 SMA. Okay, and so those are our two moving averages there. And what I'm going to be using for this is I'm just going to be using these as a filter for some of the noise. I mentioned that on the lower time frames, you get a lot of noise, right? You get a lot of back and forth choppiness that isn't really kind of distinguishable from other serious moves. So for me, one thing that can help with that is to use this sort of concept of having two moving averages and waiting for them to kind of start getting going, right? Or starting to move. Remember, we're trying to capture a piece of the move. We don't have to capture every single pip of a particular move in order to be profitable. We just have to look to catch some of the wave or ride the movement, right? So when we have something like this, I'm going to be looking for the blue or the red to be crossed over one another to signal or indicate that there might actually be some momentum and actually some movement or volatility in this market. Now you can see right here that we did cross, right? So you have this blue going underneath the red. To me, that would be a signal that, okay, now we're going to look for some bearish opportunities. But how are we going to do that, right? The next concept is we're going to be looking for pullbacks. And what we're specifically going to be doing, let me clear this up a little bit, is we're going to be using structure to our advantage. Now I've got just on MetaTrader a simple horizontal line, whether you're using TradingView, NinjaTrader, MetaTrader, whatever you look at, right? You can use a single line for this concept. Now, what I'm going to start doing, guys, is I'm going to just look for significant structure zones or points on the chart. So when we have this crossover, when we have this indication of, okay, this market is starting to go bearish, we're going to be looking to ride that bearishness and to see it continue. So in this case, we'd be looking for sell opportunities at a significant pullback. So how do we get a significant pullback? Well, for me, that means taking a look at structure. Now we have this zone that I've just identified here, right? That support zone held here, it held here, and it held here. Price significantly broke through that zone right here. And so on a retest of that zone, this could be a good opportunity to look for a short opportunity. And what you're going to find, guys, is that this concept actually happens again and again. Well, I mean, pretend that we don't see what's going to happen. This could still be a good trading strategy, but let's take a look as if we just are looking historically. You can see that this actual concept applies again and again once markets really get going into momentum. Part of that key, though, guys, is going to be looking for markets that are actually moving, and that's where the moving averages can come into fruition there. Or if you look for something else to confirm volatility or confirm a trend, that could be a good measurement as well. So we have these structure points, and look at what's happening at these levels. If we just use a black marker here, you can see that there are reversals happening at these levels, right? You can see we had some sort of short-term bullishness, price breaks through, we found bullishness there, resistance, we found short-term bullishness there, right? Or consolidation and a breakthrough there, right? So that's kind of the general concept there, guys. We're going to be identifying structure points to look for opportunities to trade pullbacks. Now, remember, we're not going to be taking buy opportunities. We're going to be using this to sell only in the favor of the day momentum, right? So the momentum of this market is currently down, and that's really where we're going to be looking to enter our trades, is in the direction of this market. So when we have this setup, we have these kind of pullback zones. How do we actually trade them? Well, you have a couple different options. You could, if you would like to, wait for some sort of candlestick pattern, right? Or some sort of other confirmation. If that's something that you would like to test, feel free to do so. This is just a strategy idea for you. When price pulls back to these levels like here, what you could do is you could look to sell this market here. And then you may ask, well, where do you put some sort of target and how do you manage the risk? Well, remember, we're operating on a short time frame and spreads are going to be a little bit costly, right? So the bid-ask spread is going to be costly. So you can't put your stop loss too tight because you'll just get whipped out of the trade. So you have to be a little bit cautious here. So what you could do is you could say, okay, well, I have this level of resistance looking left, right? We have this level that was a support level, became resistance. And again, you're going to see this concept again and again. I'll even draw it out, right? So you have this, right? And you have something like this. This is really the trade setup that we're looking for. And what this kind of is, guys, is a fresh breakout, right? A fresh break of support becoming resistance. And that's really what we're looking to trade. We're looking to trade in the direction of the overall momentum of the market. And we're looking to catch fresh retests on a particular zone, right? So that's really kind of the main concept with this strategy. So with that said, when price pulls back into this area, this is where you could look for a sell trade, right? You could set up a sell in favor of that downwards momentum that we are seeing. So where would you put a stop loss? How would you get out of this trade? Well, you have a couple options, but one way is just to kind of eyeball it and say, okay, well, I'm going to go for a 2-to-1 or maybe a 3-to-1 if you'd like to test that, or even a 4-to-1 if you're really getting aggressive with the momentum side of things. And let's say that you give the trade a little bit of stop room, right? So you have this zone here. Maybe you say, okay, you know what? I'm going to put my stop here. So this is where your stop loss would be, right? And then from there, you could trade and you have a couple options to test on your own, right? You could go in and you could say, okay, I've given my stop this amount and maybe I go for a 2-to-1. And so in that case, right, you would be somewhere right around here. I literally just eyeballed that. So if it's not perfect, I do apologize. So I just went there and I took my stop loss and I went 2-to-1. In actuality, you would want to calculate the pips and you'd want to do something like this. I'll actually just show you. You take your crosshair, and if you're on trading view, you can just shift and click this on the page and you'll get this pip counter. So we're risking 8 pips. So we want to go for like 16. Okay. And yeah, that was pretty close. So right around this area, we'd want to be going for 16, right? That gives us a 2-to-1. And you know, you have to account for spreads as well. So maybe you go for 18 pips, right? To calculate that in. That's just one way that you could trade this concept. And what you'll see, guys, is that this actually happens again and again. In fact, you had another opportunity right here. This level here was a supportive level, right? And so when price broke through it on that retest, going off of what we just talked about with our concept, that could be another sell opportunity. So you could sell in this area, right? And in that case, let's say that you applied a similar concept. In this case, you might still be in the trade. Let's say you put your stop loss just above recent structure there. So you have a stop loss there. Going through our technique there again, let's get our crosshair out. If we sold right here, our stop loss is 10 pips, so we probably want to go for 20 pips. Well, in that case, we would have actually gotten out of the trade nicely. So you can see our take profit would have been down somewhere in this area here. And in that case, we would have gotten out of the trade very, very nicely. Now, I know that this is hindsight and that I'm showing you guys an example of something that does work, but this is something that you really do see again and again in the markets, right? So you even have a setup right here that could potentially be an idea on another sell trade, right? So we've take profit on this one. And this is where you could even look to take another advantage of another trade. And you could just keep doing this until it stops working, right? So once it stops working, maybe you just start looking for new opportunities, or you wait for the market to get moving again. Again, the idea here is that you're going to be capturing momentum. You can see if we pull up USD CAD, we have another example. I just wanted to show, there's more, examples of this all over the place. You can see, for example, we have USD CAD moving to the downside here. And if we just kind of start doing some of this kind of same structure, if we start looking for structure in this market, you can see it really does happen all over the place. Structure seems to be everywhere, right? So there's just again and again where markets are doing this. Now, is it going to work every single time? Of course it's not. It will eventually kind of break down, right? For example, a one where it wouldn't have worked is you can see that price found support in this area. Price broke through and we looked for a retest entry right here. You could have gotten short here and that would have been a stop out, right? That's part of the reality of trading, is that nothing is going to be perfect. But look at all of these opportunities in the form of kind of riding this momentum to the downside. Here's a trade right there, right? You have structure here. There's one potentially right here. Right? You have one right here on the retest. You have one right here on the retest, right? Just again and again, when the markets are moving nicely like this, there are really some opportunities. And that's why a lot of people really love to trade with the trend, is they like to get that dominant market energy going so that they can increase their odds of winning by riding the momentum of the market. And this is just one of the ways that you can do it. Guys, feel free to comment down below if you have ways that you could improve this strategy or concepts. This is again, just something that I came up with and I wanted to share it with traders around the world. Thanks so much for watching my video. I hope you got something out of it. Make sure you comment down below and give this video a thumbs up if it was helpful, and we'll catch you next time.